One day after Liberation Day yesterday, which saw the U.S. stocks fall sharply, the U.S. yields fall sharply, and the U.S. dollar fall sharply. Today, we're seeing more of a mixed reaction in the currency market, with the Aussie and New Zealand versus U.S. dollar moving sharply to the downside as China retaliates with their own 34% tariff on U.S. goods. So the war is on. No peace in trade land. What has that done to the three major currency pairs from a technical perspective? I'll talk about this in this video and explain why. And also, this is all before the U.S. jobs report, which we released at 8:30. So buckle up, folks. Here we go. Let's start by taking a look at the euro versus U.S. dollar on the 4-hour chart. I'm going to box up a area right through here. This goes back to August, September, early October for the euro versus U.S. dollar. It's near the highs that we saw in 2024. And you can see the ups and downs that occurred within this range between 1.10, nice little round number there, and 1.1213. So it's about 213 or 14 pips from low to the high. And that range was extended for 1, 2, 3, 4, 5, 6, 7, 8 or so weeks before the market finally broke to the downside. You can see the break and the retest of the low of that swing area before moving to the downside, and that was last time the price. So the market saw that level. Another level in play during that time was this level right through here. I should have taken the yellow all the way back to here, but you can see the number of different times that the market either found resistance right here and then moved above it. We failed, and we came up to our swing area right here, by the way. Then rotated to the downside, had ceiling here, broke above it, and then retested here and moved to the upside. So this area was another area between 1.0936 and 1.0954, and lo and behold, in trading a few weeks ago, the price came up to that area, found willing sellers not once but twice, moved down to the 200-day moving average right here, found support buyers against that level, and then broke to the upside in trading yesterday. Now, it moved to the upside yesterday, extended above this area right through here, and also above this area right through here. I guess I should have said this one first and this one second, on its way into this red box area. Now, when you get in the red box area, anything can happen, because as it did right through here, and that's what the market did. The market fell moved above an interim level around 113 level, but then in trading here today, you can see how that level capped rising, and we started to see a rotation back to the downside. That rotation to the downside took the price below this first target, but ahead of this target right here, and we've since seen it bounce back to the upside. The 113 level, around that level, is going to be the next level to get above. We can get above that level. We're in the upper quadrant here, or quadrant of this range right here. I don't know how, but we start to think toward the high prices right through there, through this 112 to 112.13 level. Euro's going up despite all these higher tariffs and expectations of slower growth globally. But the U.S. dollar is not performing well. They're the one who started the fight. So, or it's this fight, I guess. I don't want to talk out of line here. For some of you out there, I'm just outlining the price action in these currency pairs. So be aware of all those levels. Let's take a look at the dollar versus yen. And yesterday, I pointed out in some of my posts about this area right through here as being the next key target. You can see why going back in time, and if you're familiar with what I try to look for these not only moving averages but swing levels. And this was clearly a ceiling over here for about a week, where the price moved up, fell down, moved up, fell down, moved up, fell down. By the way, on the downside, we did find support against its 100-bar moving average. So there's a battle going on. We broke above the top side, and then we failed really quickly. Some news came out, and we came back up to that level, found willing sellers. And what do? We found support again here. I showed this because this is what makes a level important. Why traders, when you go all the way up to here, find support buyers against that level, 144.50-ish type area, and we since bounced higher. Another level of importance that doesn't take a genius to see is this level right through here. It was the low price that we saw in 2025. And what did? We went back up and tested that level on the top side right through here, and found willing sellers against that level as well. So now we have, as we go into the jobs report, we have support down here at 144.50-ish area, resistance up here at 146.50-ish area, and we'll look for and we're trading, somewhat in between, maybe a little bit more to the downside at 144.45.24. So if we break below this level, the bias goes to the downside. If we break above this level, we're still going to have to get above the 61.8% retracement. Maybe this swing area right here to prove that the buyers are taking control. After all, we've been on this downward trend here for a while now for the dollar versus yen. So be aware of that. But right now, battle between these two levels in the dollar versus yen. We'll see how that plays out through the jobs report. Now, finally, we'll take a look at the sterling versus US dollar. And this currency pair moved above the 100 bar moving average in the 4-hour. Actually, I want to go to the hourly chart. Why do I want to go to the hourly chart? I'll tell you why. I'll show you why. And if you look at the hourly chart, and focus on the 100 and 200 hour moving average. Bring it in a little bit here as well. What do we see in trading yesterday? Well, we saw the price base, or 2 days ago, we saw the price base against the 100, 200 hour moving average. We moved higher off of that, and then trading yesterday, we moved sharply to the upside. Now, we're back down, and I could talk about up here, and these other levels up through here. But what I want you to focus on is right here, where the price returned back to the 100 and 200 hour moving average. And what do we do? Found support buyers. We're currently trading up at 130.17, so up around this level right here. So successful test of the 100 and 200 hour moving average. This currency pair is, obviously a little less trending, or a little less trusting of the sterling versus US dollar going higher. In fact, it pretty much erased the entire move from yesterday in the move down today. But what we did establish in trading here today was this area is key. It increased its levels importance. And so as long as the price remains above that level, we could continue to move higher into other areas, just go up toward our highs that we saw in trading yesterday, and maybe corrective highs like this level right here, 130, 114. Alternatively, if we do break below this level, it's your stop level. If we go below that level, the price should move lower in the pound versus US dollar. So just be aware of that and look for lower levels, which could take the price all the way back down to the 200-day moving average with this volatility without much problem. So there you have it. A look at three of the major currency pairs that kickstart your day. I know it's tough for especially equity investors. Most of us are. But stick with it, and hope that you hedge some of your portfolio. And in trading in the U.S. dollar, where follow the levels. Currencies move up and down. We know that, so pay attention to the key levels. They tell you the story. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.